Hey, folks. Good morning. Good morning. Last day of the week, last day of the month. Um, Hopefully, it's a nice, pleasant weekend wherever you're hailing from. Yesterday was a doozy of a day in the markets to the upside. Today, futures are in the green. I mean, if anybody tells you I saw this coming, I think you need to probe them further. Um, the fact that Apple is dumping in the pre market this morning, it may have its worst day that we've seen in a really long time. Stocks off 7.5%. Amazon, on the flip side of things, very strong in the pre market. And then yesterday, yeah, people can say, um, I don't know. We were, quote, oversold, but the confluence of activity yesterday, along with the headlines, along with everything that went on overnight in South Korea, God bless if you called to this one, but call me skeptic. I don't think so. So overnight, SK Hynix in Korea up 30%, Samsung up 27%, the Kospi, the index up 18%. Like I said, I think that the greatest catalyst to all this, unfortunately, has very much to do with Leopold Aschenbrenner, who we discussed yesterday, incredibly timely so, and just the headlines crossing that effectively there was a relief that his portfolio was liquidated, at least his portfolio of public equities was liquidated, and that it was now in hands that are way, way stronger than his inside of Citadel. And just so we're clear, we spoke a little bit about Leo yesterday. Again, you got our hottest takes right before all the news broke. Um, Situational Awareness is the name of his fund. The young man is in his 20s. He was up as of the end of June, 490% on the year. Last read for his performance in July was down 67% for the month, right? That's after the 490% tick um, at the end of June. His fund is still up 80% for the year. So, on the whole, the young man has done well. Um, the fact that he was levered to the moon on everything is a little berserk. I don't know. I would love to understand what was going on through his head, thinking I need to turn 460% into 1200% for my investors on an annual basis. You certainly don't get as much applause for turning 460 into 1200 as you will in derision if you turn 460 into zero. So the risk reward I don't think was there, but again, I'm no longer 25. Um, again, just psychologically, I'm curious. But that is what it is. Once that news crossed the tape, everything rallied. Everything that was at risk in Leopold's book in terms of long investments that were levered, that, according to at least Martin Shkreli, and I do trust Martin on things like this because he wades into the cesspool that is manipulation of markets, which is prevalent all over the street. Um, he said folks had known about um, the fragile nature of Leopold's book for some time, and folks had been shorting hard against it to see where the breaking point would be. And then once Leo is out and Citadel buys the whole book, you've got to be insane to continue to keep your short on, because no longer are you dealing with at least as fragile a holder or weak a holder, trading Leopold levered multiple times over for Citadel that can afford to just sit on the position and probably even had some shorts to cover having bet against Leopold. And to people in the audience that may not think that this is a nice way to play in the sandbox on Wall Street, this is the way it rolls, folks. We're all just collateral damage in these situations. The biggest of the giants go ahead and bludgeon each other, and they're playing for billions or hundreds of millions of dollars in bonus money, and the rest of us are just bystanders, excuse me. In other news, which is no less consequential, Japan intervening in their currency. Japan sells US dollars, buys yen, massive currency intervention, because as we've chronicled here, the yen has fallen to a 40-year low against the dollar. The yen is up a couple of percentage points. In market activity yesterday, despite the rally in tech, Meta records an 8% loss and its longest losing streak ever of 11 straight days. On the flip side of that, it was Microsoft's largest 1 day gain, not only for Microsoft in the history of market history, of in the history of the market, I should say, the largest 1 day gain for market cap of any stock. It was a $500 billion add for Microsoft yesterday. That is the largest 1 day gain for any stock ever on absolute terms. So yesterday was eventful. Today is shaping up to be a positive day, at least in futures. Nasdaq is up a point, Dow up a half, S&P up a third, and we are not even close to done yet with earnings season. We have to talk a bit about Apple's results versus versus Amazon's results, and then we'll talk about some other companies. David Nikovsky, good morning to you, please.
Hey, good morning. It was from what I've read on the Leopold situation, he does actually still retain a portion of his portfolio from his original investors. So all he did was, from what I see, at least what I've read, is that he his levered products, his levered trades where the margins calls were, is what he sold to Citadel. So I think he's still operational, but he's no longer levered. And that's the big problem with leverage in this market. You can clearly see, Korea was up, 15+% last night. Largest move in there. Like, imagine if our index moved 15% a day. We've never seen it. I mean, these things are trading like meme stocks, and it's leverage, and funds are having to go in and cover. And you see, I've always had this thought that, with a lot of these passive products that we have, funds are being forced to chase Microsoft and bid up the market cap because they need to add more as it goes up. This is the tail wagging the dog, and they can have serious ramifications. The one thing that I see overall, is that this leverage is just these moves are, I mean, are beyond comprehension, for a guy that like me that's been in the market for 39 years. Um, this is really an anomaly that will be studied, I think, for quite some time. When it comes to Apple, one of the things that and Eladio would agree with me if he were in here, but you know, Apple is like the safe tech stock, right? When semis are crashing, Apple's hitting a new high. Semis bottom and Apple breaks down, right? It's it's kind of like owning Berkshire, right? You're paying a lot for their cash. If you were buying Berkshire, anytime the market's down, just go buy Berkshire. But realize you're paying, $2.20 for each dollar of theirs. And Apple's the same way. It's a safety stock. Just like Walmart and Costco were like the best names to own in consumer discretionary. When there's problems and people can't figure out what to do, they buy Walmart and Costco. But if you look at the charts and see the declines that they've had in the last month and a half, I mean, they've absolutely melted down on a relative basis. And this is that passive all over again. When something goes down, funds are forced to sell and liquidate. And that's why you're having just huge divergences within sectors. Is, in my opinion, that's a big part of it. It's just this massive animal that's pre-programmed to buy and or sell anything going up or down, and finding those inflections. Yeah, on the shorter term charts, and I don't mean like 2 week charts, but looking at a 2 year chart and looking for, a 3 month reversal, where something trades down for 3 months and then reverses and moves up. That is the common pattern I'm seeing if I look through 2 year charts of many individual stocks. Is like they get oversold and then they get bid up, and the real trend is sideways in most names. It's not up and to the right. It's not straight down to the right. It is just a trading mechanism to just disturb the heck out of you from a buy and hold standpoint. And some of these names are moving up and down 25% from their 2 year high to their 2 year low. I mean, that is something I see across the board. So we'll see how big this passive market gets, and how it just has to consider, continuously chase the bouncing ball. So another interesting note, I'm going through like a lot of the foreign markets, and even the markets that no one wants to touch, like Europe, most of them are at 3 to 4 month relative strength highs against the US index. There was a article that, Bob Farrell had written many years ago. Many of you in this room may know who Bob Farrell is. He was a very well renowned technician. And just like you saw in money chasing the Korean market, and then you had foreigners pull money out. It's very common that foreigners have the largest positions in the U.S. market. Our market, from a valuation perspective, is, in some cases, two, if not even greater times valuation than many of these foreign markets, even though no one wants the foreign markets. But the last aspect of a market peak is also, significant investment from foreign individuals and countries. And if that unwinds, it's something I've talked about, a few times in the last 2 years. I don't know if it happens or when it happens, but again, I just want to reiterate, you have to think to yourself, like, when does that repatriation start? Dollar had a bad day yesterday, took us through a couple of support levels. So that's important to me. We're trading up today in the dollar, and again, if we can't get above 100, 101, that can be a problem. But right now, it's a non-issue. So just things to be aware of. Thanks. Back to you.
Excellent. Thank you, Dave. Let me piggyback on a couple of points. As far as I understand it, according to the reporting, situational awareness's entire public equities book has been sold. Levered, non-levered, all positions have been sold to Citadel. That's what I've seen. And then it is rumored that he is trying to sell his Anthropic position, but not yet any progress on that sale. As for Apple's results, so Apple's results, in terms of expectations, beat estimates on all accounts. The guidance was soft. The guidance was soft because of the fact that Tim Cook said for the last time as Apple CEO that it is next to impossible to get memory chips. And therein lies the kink in the armor that Apple has, which is that it does not have uh, vertically integrated, production of the chips that it needs. And so, raising prices is the only thing left to do because they have to pay increasingly higher prices. And the expectation is off the back of that, that demand will come in because of the price raises. And so that's why the quarterly revenue growth that was forecast came in short of what folks were thinking the all important fourth quarter. Go ahead, Brandon.
Yeah, morning. So there seems to be like a few topics that I think that maybe we didn't get into. I'd love to talk about the Leopold thing briefly, but a few topics that we didn't talk about yet. One being this Bitcoin situation with the cold cards, and I think that that is something I'd love to hear a little bit more about. I think that's a pretty major situation that I've seen, at least on the timeline. And if it's not, what is it, hard wallets, whatever it's called, if it's not safe there, how is it safe? What's kind of the situation going on with that? It seems to be a lot of money lost from what I've read. The second one is Anthropic came out and said that they had a similar situation to OpenAI, as far as hacking other companies or getting into other companies. And yeah, I think their announcement and the timing is a little fishy, but I'm not going to get into my full thoughts on that. As far as Leopold goes, it's not that anybody in here is doing it, but I've seen it on the timeline too much. It seems like, people that watched a few TikToks on the show Billions are trying to get at this young man, and it's just not. It's just not true. Again, when you when you look at these things, and I come from a venture perspective, not hedge fund, whatever, but I think the important thing is, how much LP capital has been lost, and returns there, and he's still in the game. So again, yesterday when I said this was being overblown, and I think that it still vastly has, uh, he he's still in the game. And if you wanted to make a direct comparison, and I think I've seen this on the timeline a few times, Peter Thiel had a very similar situation with Clarium Capital way back in the day. And Peter Thiel's obviously one of the most successful private market investors that we've ever seen. Too much risk. It seems like a very similar situation with Leopold here. But this is he like we're acting like he just made monumental mistakes. He got outplayed by Ken Griffin. There's only one Ken Griffin in the world. Like this is, I think people maybe are misunderstanding who Ken Griffin is, and this is just what happened. Whether you want to believe the stories of they put out Citadel put out the story of rate hikes to kind of massage this. a little bit, and I'm not going to say, it was evil or done evil. I don't think it was at all. This is just the game, and so the people that are pooping on Leopold here, the vast majority of the time are people again that have watched a few episodes, or not even episodes. They probably watched a few TikToks because of the short attention span of billions, and now think that they could run that fund better than Leopold did. This kid is an extremely brilliant wonder kid. He's someone that you don't just attract millions and billions of dollars because you're a mess up. He's going to recover from this. He's going to do fantastic. And anybody that is kind of shitting on this young man today or yesterday, you really need to check yourself and take a long hard look in the mirror why you would try to shit on this young man. I think that he's going to continue to do fantastic work. As far as the Anthropic sale of it, he actually did have offers to sell 3.5 billion of it from I believe or to Sequoia and Green Oaks in a joint deal that he decided not to, and that's the story that's out. I don't believe he's still trying to sell those positions. It just seems like yesterday I made a funny comment that it's so much easier to be in venture. You can sleep better at night, and God bless the public market investors. And I still feel that way. Maybe it's less excitement. I don't know, but it seems like that may be where this portfolio is going. Is for now, at least, more of playing in the private markets. Now, do I think it's smart to just hold on to Anthropic? I don't know. The rumored valuation he was going to sell at was 1.2 trillion for them. If that's the case, I would have, sold that and went outside and walked the dog because I don't believe that they are going to be valued at 1.2 trillion long term. But that's again just a rumor. So I think that people, and again, that would mean it's not coming at a significant discount. That's why I'm saying it that way. So, again, let this situation kind of play out. Please, don't come in here and in the comments or come on stage and try to shit on this young man. He is going to do phenomenal things. He's done more than myself and probably all of us up here on stage, transaction wise, than all of us put together. So let's just kind of see where he goes. But again, it's a very similar situation to what Peter Thiel had happen, and look what he ended up doing with the situation. So let's just kind of see how it plays out here. But again, those two stories I think that we should definitely talk about quickly.
Yeah.
Hey, Brandon, I'm sorry to jump in, David. Any comments on OpenAI dropping some of their prices for some of their most recent models?
Yes, yes. I'm so glad you brought this up. This is something that we've talked about many times on this show. What a smart move by them. I mean, again, we're just kind of seeing, uh, we're going to be seeing long term a, just a price compression here, I guess you could call it. I think that it's going to be a battle for consumers at some point, and how often do you see a company drop their prices? And really, it's not often, for those that don't know, but really the reason they're doing it is they're trying to win over the consumer. I think that they have the best. I don't know. I would say, if people were saying like I'll Google things, now they say, chat GPT it, even though if they mean, I'm going to use Claude, like who says I'm going to Claude it? I'm going to chat GPT it real quick. Or maybe, if you're heavy on Twitter or X, I'll Grok it. But nobody says, oh yeah, let me Claude it real quick. So the branding is there. I think they're going after that. I still think, the big money is going to be made in enterprise, but if you start getting a bunch of people and market share and brain share with ChatGPT, which you can do by lowering those costs, what a brilliant move. I think that this is going to be the strategy for probably the next while. Will Anthropic follow suit and lower their costs? Who knows? But just to be clear, they only did it on Terra and Luna. They did not lower costs on or lower price on Sol, which is their frontier model on the same or similar level to Fable.
Let me before I talk about the hardware wallet drain. Um, cold card, excuse me. Let me just make a point about situational awareness and about Leopold, just to jump on Brandon's point. The real question here is, does he stay in the game or not? I've seen a lot of really smart people taken out to their first woodshed and never return, and it's a shame, right? I think anyone that's been in markets long enough has had a very very bad run, day, whatever you want to call it, week, month, year, and certainly had to dig deep and figure out, am I doing the right thing? Is this meant for me? Maybe I should be doing something else. Um, and I will say that for those folks that enjoy markets and enjoy investing, just stick with it. The point of each one of these exercises, is to learn from it. I mean, hopefully you don't lose everything on anything, on any one particular route. But I would expect, to Brandon's point, you know, Leopold stays in the game. He reminded me, by the way, of Chase Coleman more than he did of some hotshot public funds guy. Anyway, maybe he will be a private markets guy long term. He's an incredibly smart guy. The interesting thing about all this is he had 100% long book levered. So you ask yourself, I don't know how many people in here manage assets for a living, but when you start to talk seriously to an allocator, they ask you all sorts of questions about what is your risk management infrastructure like? Well, clearly there was none here, right? Clearly everyone just turned a blind eye to that. That gave money to Leopold. And not saying that that's wrong or inappropriate. The man was producing, eye popping returns. But a lot of times, I bet you now, this young man is receiving a lot of calls, or already has received a lot of calls about, what the hell were you thinking? What kind of risk management protocols going on did you have? How come you couldn't liquidate your portfolio in natural order? If he didn't get a bid from Citadel, by the way, to take him out on a wholesale basis, who the hell knows what this book would have looked like by the time he got done selling it? So, and by the way, Citadel for sure took its own pound of flesh out of this book on the trade. Definitely Citadel did not buy at market prices to take Leopold out. They probably said to him, either we take you out at the price of X, or we're going to let the whole world know, or whole world is going to know that it's like Archegos all over again, if folks remember that. Everybody will know, and the whole world will force you out of these positions. So is just pretty incredible to me. And by the way, I don't know if no one said anything about whether Citadel was an investor in situational awareness. I'm not saying that they are or were, but it would not surprise me if they were. If you recall, back in the day when Melvin Capital, spin out of Point 72, was getting out of the meme stocks that they had shorted, inclusive of GameStop, Citadel was an investor in Melvin and then took Melvin out of its positions. So, there's a lot of incestuous activity here, whether it's insider trading or market manipulation. I'll leave that for the lawyers. That's not what we're discussing today. But when there is blood in the water, clearly blood in the water on Wall Street, the sharks immediately smell it and they go after it relentlessly, unforgivingly. They have no sympathy. They are there, and folks, remember this: everyone's in this game to make money. I'm sorry to say it, and this goes back, Eric, to our point discussion yesterday about FIFA and UEFA. Right at the end of the day, if FIFA was never clearly structured to be a non-capitalist entity, non-profit entity, as a capitalist minded person, I don't hold it against anybody for trying to make money out of this. Unfortunately, that's what the game is, pure and simple. It's about money. And so, what happened with, I'm sure there'll be more to talk about with respect to, situational awareness and Citadel and so forth. I think it is what it is, as many people have said. But that being said, there are lessons to be learned from this, just in terms of how Wall Street functions, how trading works sometimes, and just nature of the beast or animal spirits. Go ahead, Eric. Good morning.
Good morning. Just a couple of comments here. First, for the FIFA. Well, more than 100 years ago, when it was made in Europe, it was not made for a capitalist mindset. It was made to develop football and organize an international competition. It's a different, very different from the United States, especially 100 years ago. And the other comment that I want to make is about this guy that we're talking about who didn't have any risk management. I don't care how many hundreds of percent he was on side or in profit. You always have a hard stop, liquidation stop, when you're that much into profit at your original value plus maybe 10% for the fees and whatnot. You cannot ever go into the negative when you're that much in the positive. Absolute. This is basic risk management which anybody knows. If he doesn't, he should never touch capital until he learns his lesson, because that is very, very, very important. Back to you, David.
Wait, he's still 80% year to date up. So what are we talking about going in the negative here?
Okay. As long as he is, then why should he liquidate it if he's 80% up?
There was a chance he'll lose it all. I mean, if it became public that he was so long these positions, just as a technical matter, folks would continue to short against him, and eventually the weight of the shorts would simply break him, right? Because he's levered on the long side, so he would face margin call upon margin call upon margin call, and he'd just keep selling down until he met all the calls and be left with zero. So that's
Yeah.
good.
It if you know the hedge fund community, like if you take a 67% markdown in a month, you're done. That's not how the hedge fund, it's a hedge fund. He can go long and short. So a hedge fund is looked at quite differently than, a long only fund, right? Where they have to be invested. But if you're a hedge fund and you're down 67% in a month, you will not get $1. I don't care if you were up 450 and down 670 or 67%. That's not how a hedge fund operates. A hedge fund is all about risk control, a lot more than a long only fund. So keep that in mind. You would never last an hour, making 450 and then going down 670 as a hedge fund. No one would invest in you. So back to you.
Good morning, Timothy. How are you? Your thoughts? Go ahead.
Good morning, David, and everyone else. Yeah, I just wanted to give an alternative view on what Brandon said about OpenAI, because I do agree with Brandon. I think it's a good trick or a good strategy to increase market share. But I think it generally works only if the technology that you're trying to provide to the general masses, or to the enterprise game, is when the product is quite sticky. So, for instance, when you look at platforms, or let's say cloud databases, let's take as an example, for instance, Microsoft, Google, AWS. If you lower your costs there and you try to attract more enterprise customers, it's quite a sticky technology. It's not so easy to switch to another one. So if you would increase your prices later, the enterprise doesn't have necessarily the immediate option of transferring to another cloud provider. However, with LLMs, I think that's actually not the case. It is, in my the way we work actually with enterprises, we provide gateways for enterprises to choose any LLM on the market that they prefer. That could be based on quality output, that could be based on cost measurements. But there is not really a brand loyalty from an enterprise perspective to, let's say, an Anthropic or an OpenAI. So my worry there is that if OpenAI is lowering their costs just to attract extra market share, but they're actually their cost or the revenue that they generate is not enough to actually sustain the cost as a company, I think they will face the same issue later on when they would increase the price again from necessity. That they will see that a lot of people will leave the services again. So I don't know how good of a long term strategy that is in this case, just because there is not that brand loyalty, and there's also not that, let's say, heavy reliance once you make a decision. So that's just a thought I had, and that's a, let's say, a critical thought of what Brandon actually mentioned. So just wanted
So
to give that.
Timothy, I love your point of view here, and I think it's great. But let me throw out just a counterpoint to you here, real quick. What's one of the greatest startups that we've been talking about? Um, that's good. That's looking to get acquired by Stripe recently. Open Router. What does Open Router do? Almost exclusively what you just explained. That they route to the most cost-effective model at the time that can give the best output. There's multiple layers to that, but if now they say Terra and Luna are the best model to give you at the least expensive price, it's getting routed to Terra and Luna on the enterprise level first before it starts going to Claude or some of these maybe open weight models, et cetera. They give you a long list, you can put them all in there, and it routes you automatically to the best one to use. So that's why this is a brilliant move. I completely agree with you that that these models aren't sticky. Like I just the ability to switch between them is so there's no reason to keep using it, or one model versus the other. But in the world that these open routers, and there's other ones that are out there, will route automatically for you to the best model for the lowest cost. This kind of makes and is a smart move for OpenAI to do. And I think that if I were to guess their strategy, I would say it's that.
Yeah, I mean, I agree. Just as a response to that, but the question then for me is, and I don't have that data, but I think I read once that even at current prices, OpenAI is actually losing money on their on because the cost of the infrastructure to keep things running and the energy that is required is actually below the prices that they currently give, or above the prices that they currently give. So if they lower the prices even more, then is that a sustainable strategy? So even if you increase the usage of the services, that also, in some sense, means that the cost of running in the background for OpenAI as a company obviously increases, right? So there's more energy being used in the back office, which would then by definition increase their costs as well. So that is just one worry I would say I have. I don't know if they can do anything in, let's say, lowering their cost structure from an organizational perspective. Then that would make sense. But I think that's just a critical thought I have on that strategy. Back to you, David.
Excellent. Let me just go back. Last point from me, certainly on, at least for today, on situational awareness. Someone asked about the stories out about Citadel's prediction that the Fed would raise rates. That was suspiciously well timed relative to the pullback in the market, further hurting situational awareness's positions and making them be a further discount or pushing Leopold to be a forced seller even more. Look, I'm not a conspiracy theorist on the one hand. On the other hand, I've been a while around Wall Street long enough to not be naive. Uh, these are the facts. Citadel was very much an outlier when it came to um, a prediction that the Fed would raise rates. The the chief economist at Citadel is brand new. He is not a macro guy by training or by professional background. His name is Frank Flight. To my knowledge, he has never been quoted in the popular press around a prediction for the Fed's move. And the fact that Citadel, he changed his prediction this week, right before the Fed's move. And according to Shkreli, already by Monday, people were pummeling Leopold's book. Do I think that Fed rate movement really was the straw that broke the camel's back for Leopold? No. Do I believe that there was this organized cabal at Citadel between Frank Flight, Ken Griffin, the guy that managed the book of shorts betting against Leopold, yada, yada, yada? I don't think so. I don't think that that type of coordination happened. If it did, though, would it shock me to the core? It would not. That's really all I have to say on that matter. We would just be playing a game of speculation on this. So that's all I have to say. You can hold a different position on it. We're not going to know who's right or wrong. Either way. Frank, um, I see that you're trying to get up, or Frank Delaney, um, first time on the show. Please go ahead. Your thoughts on on all matters discussed.
Is this me?
That is you.
Hey, how are you, Dave? Frank Delaney. Um, Listen, I ran a fund, and you know the news about what was going on. First of all, this guy had two prime brokers, right? He had two prime brokers, so they have risk managers that are watching this. So this isn't a this week event. It's probably started several weeks ago, or at least a couple weeks ago. Um, I went through the MF Global debacle in
Two
2011.
things, Frank. Do you know who the PBs were?
I think it was Goldman Sachs and JP Morgan.
Right. It would shock me if all he had was two PBs with a, you
I think
know.
he had four, but I
Okay.
know it was JP Morgan, Goldman. So, you get into counterparty risk and things like that. So everyone's watching. There's no secrets on Wall Street. Once one person knows, everyone else knows. Once MF Global, that was MF Global broke the day after I started my fund. I had money at MF Global. My prime was JP Morgan. And I went through the first day. It was great. Made a few bucks. Second day, I'm watching MF Global trade down. I called them up. I'm like, I'm fucking days in business. Move my money over back home to JP Morgan. They're like, no, everything's gonna be fine. I said, I'm telling you once, I'm calling the SEC right now. Move my money. They moved the money back. 2 days later, they went under. So like it gets out there, and there's counterparty risk. In 2000, I was a specialist on in New York, and we were up for sale, and we had an option guy kind of going sideways. I looked at his positions over the weekend. I came back. I'm like, if the market moves 10%, 5%, we're going to be under fucking water. We got to get rid of this. I called. It wasn't, we're talking about, $5 or $10 million. I called my friend over at Susquehanna. He evaluated the portfolio. I sold it to him at a 10% discount. We're done. So, like, I don't know exactly what happened here, but I suspect the guy was up against the wall. He knew it was coming. And who do you go to? You're looking for a liquidity event. And so what he did was he called Citadel, and they priced it, and they took it at a haircut. And that was it. It happens all the time. And by the way, there's two more that I've heard that are going through similar. And this happens in every downturn in the market. You just never hear about it. Guys shooting against shorts, that's part of the game. You're 100% right, David. I agree with everything you said earlier. Like, people will shoot against you, but they can get crushed also when you see the reversion that we've seen in the last 2 days. So, like, this is part of where it is. And I heard another gentleman talk about private equity, and you're right, private equity is out of the markets. But what does private equity use for liquidity event? If you take a look at Mike Subs yesterday, that's a liquidity event. They private equity bought it from the owner of Mike Subs, probably bought it at a little discount. They they did a little shrink on everything, and a year later they come to the markets and they're liquidating it. So, like, private equity eventually looks to the market as a last stand, or they're selling their entire business to Google or Microsoft or somebody else, right? So there's a lot of internal things that go on Wall Street that people don't completely understand. I don't know if this young man, I think he'll be great. He's smart. He had the right ideas. He's probably 100% right about his positions. It just was the leverage killed him, and his timing. Your timing has to be perfect. And when you're over leveraged and people are watching you, and they are watching him, and they saw this occurring, and he probably is up 80% because he made this move. He made the right decision, and he had a liquidity event. So looking at Ken Griffin as the bad guy is kind of ridiculous, because they actually probably saved this guy's ass. And yes, are they benefiting from it? That's business. So, like, there's counterparty risk involved, other people. I mean, how many times have we seen this? Guys, this is just the beginning. This is the bounce. We're in a market where there's so much going on. Dave talked about it earlier. Like, we're going to see this. This is where we're at. You look at South Korea, it's not over. This is going to continue, and there's going to be bigger blowups and bigger and bigger drawdowns and bigger rallies. It's a continuation, and this is a not this is a you play for keeps here. It's business at the end of the day. So, like, I think that, like, people want to make a story out of it. There's nothing wrong with this guy. He's very bright. I think he made some logistical mistakes and over levered, and he got caught in his over leveraging. And then once one person knows, they all know. And it's just like when the shorts get run in, it's the same thing. It's just in reverse. So, like, this happens all the time. It happens in crypto when somebody launches some new coin and everybody gets rugged. I mean, that's the worst horrifying thing I've ever seen in my life. I can't believe people even get involved in some of that shit, because you're getting bagged. And I think that we're at a point in the market cycle that you're going to see more of this stuff. The volatility. I mean, we're only down 10% on QQQ, and this guy's getting liquidated. So, what does that tell you? He made a mistake. Obviously, he was over leveraged, and somebody offered. He went to somebody to take him out of his position. You have to go to where you can liquidate it, right? You're looking for liquidity. He got a liquidity event. So it's pretty simple as you go forward. And, it's kind of like happened in the markets since the beginning. I mean, look at Jesse Livermore, the biggest short seller in the world. I mean, he got taken out so many times. I mean, the guy went from, a multimillionaire to zero like 4 times. So it's the way you play the game. And when you play it big like that, the risk profile gets bigger also. And I think he should be thankful to be up 80%. I think it's great. And I think he'll survive and he'll move on. I think he's going to have to lick his wounds and, understand where he went wrong and acknowledge it. And that's the only way he survives, by acknowledging his mistakes. But anyway, those are my thoughts. So there's no secrets. It's a liquidity event, just like we see in SpaceX, just like we see in Mike Subs, except you're in a listed, company, and there's counterparty risk where other people are like, hey, we don't want to be carrying this bubble. This isn't our position. We got to watch this guy. And that's exactly what happened.
Hey,
Outstanding.
thanks for coming up, Frank. Appreciate the comments. I know that you've
Sure.
followed me for a while, so
Dave,
I
are you kidding
appreciate
me?
you, having
Dave,
someone from the
I saw
audience
the
up.
Dave, I saw the diamonds in the sky like you did like 3 weeks ago, and
Yeah.
I was texting with Jag. I'm like, guys, it's fucking like this is not. And I was a little surprised how far it dropped so quickly. And if you see my timeline, I was covering a little bit of those things, and like I didn't know this was going on, but like it was this thing was speeding up suddenly, and it was really getting ugly very quickly. And then you see the reversal in the last 2 days, and I think we'll see the market kind of like bounce around today. Maybe we put a little cream on it to just make it look good. Maybe we get back to July's lows um, at some point. The NFP lows today. But this is how markets work, and I don't think anyone is like the evil monster. It's just the way the market works, and it actually really works well. And although you're seeing a lot of volatility, you're not seeing situations like South Korea where there's two stocks running the whole the tail that's beating up the dog. But that those diamonds are still up there, and that pattern is still there, and it may that may complete itself, which is a lower number than where we are now. Maybe it's down 15, down 20%, but like maybe we rally back, and maybe the whole diamonds in the sky gets reversed from here, because of what went on. But who knows? But anyway,
Well, right now it's a stick save,
yeah,
to keep it
absolutely
above
six safe, but
the
it's not.
that threshold.
We have the 50-day. We have a lot of things we have to look at still. It's a moving target. Markets are living and breathing, and as long as there's liquidity, which is why these events happen, because the guy was saved because he had a place to go liquidity, and he was over leveraged. It used to be like 100 million. Now it's like 50 billion, 100 billion. It's crazy, but that's where we are.
Thank you for bringing up Jersey Mike's, by the way. Yesterday was the first day of trading on that stock. We knew that Blackstone was going to push for an aggressive valuation. They did. The stock traded down on the open. It opened below the IPO price and traded down throughout the day, closed down around 6% on the day. Today, marginally in the green pre-market, but we'll see how that goes. We've had some interesting run of IPOs lately. I think after SpaceX, the market is been a little bit reset, and we probably need a little while to get back to, I'd say, regular way IPOs. Certainly before OpenAI or Anthropic come along. Brandon, thank you also for bringing up. We got to talk about Cold Card. Okay, so here's the deal. As far as I understand it, I'm not an engineer. I'm certainly not an electronic engineer. But essentially, Cold Card is a Canadian firm. It's a wallet that's built by a Canadian firm called CoinKite. It's a small device. I don't know if anyone's seen some images of it. It looks like a mini BlackBerry, let's call it, or something along those lines. An old, an old pager, and the it allows users to store uh, their Bitcoin offline from any internet connected device. And there have been successive generations of this device. And these devices are supposed to generate random, secret phrases, and it is supposed to allow one to access their keys. Well, at a certain, serial number that was fixed by the factory, and the in a certain version of this, there was not as much randomness as one would expect or hope for. And it's not because of anything nefarious or even negligent necessarily done by Cold Card or CoinKite. It was simply a flaw in the software. And the Bitcoin that was taken, first of all, it was 500 transactions. They moved 1,300 or so Bitcoin, about $38 million worth. And these wallets are old, and they had been dormant um, for a period of time uh, over the last 5 years. Is when the coins were acquired and those wallets were dormant. And sure, I think the takeaway is this: there is no industry where electronic, I would call it hacking and theft and spirits motivations for that is stronger than in the crypto industry, because the tracing abilities are much less in that industry than, because of the nature of the asset, than in any other industry. And I think also it is certainly harder for authorities of whatever kind, and I particular emphasis of whatever kind, because many times you're not even talking about a single nation, right? You're talking about cross-border issues. We barely have the capability to coordinate on a law enforcement effort inside of a particular country, let alone across borders. And so there is no industry that is more under attack on a daily basis, constant basis, because the machines can work 24/7 and can iterate and can become more sophisticated and try an infinite number of times, right? If Carlo and I decide to break into a gold vault, right, we actually have to do stuff, and it costs money and it costs time, and there's real issues with, a, do we spend it on this vault or that vault, and do we get caught? It's much simpler, I'm sure, as you understand, to try to crack and break all sorts of digital assets all at once. So that's why I think it's constantly under attack. Oh, and by the way, the people that are attracted to these assets also happen to be the most sophisticated when it comes to digital capabilities. And so you have the sharpest minds in the world, playing in this sandbox and trying to outdo one another. Granted, it's illegal to steal something. But all that being said, if you believe that crypto is the only place in which this can happen, you're berserk. You're nuts. And I think, the world is on warning here, that all of software, everywhere, is under attack constantly. And, it's just a matter of what day you wake up on and realize that there are flaws, or there is a way for an attack to happen. So that's my takeaway on this. It obviously knocks against, not your keys, not your Bitcoin. There is a knock against that. You've got to make sure. Oh, I'm sorry. The most important, I forgot the most important thing. This was a single signature wallet. Every single one. I'm sorry. I should have led with that, folks. I really, really, huge mistake. There is nobody here that doesn't have double signature on everything we do. You have a single signature, anything, especially with something that holds real value, immediately liquidatable value, you're crazy. You're negligent. You're just doing the wrong thing. Every single wallet that was drained was a single signature wallet. So, yes, please have dual signatures on all of your stuff, especially the stuff that holds your most precious and liquidatable assets. All right, I'll go ahead and stop there. Bob Van Kirk, thanks for joining us. Go ahead.
Yeah, good morning. Big fan of the show, and thanks for having me up. I think you covered it exceptionally well. I will push back on a couple of things, but just wanted to maybe give a little color around some of this. I think you brought up some good points around final settlement. Bitcoin is It's a blessing and a curse. When you send a transaction, it is final. And that is, again, a blessing and a curse. I think that's something for people to understand. And so when these attackers move this Bitcoin, there is no turning back. I do think that, and maybe people know that, but I think that's an important point. Um, it is an open and public ledger. So you said there's ways for people to hide, and that's true. But it's actually more transparent. Bitcoin is an open and public ledger, so everybody can see the transactions. Now, as to who those belong to, that's and tracking it down. I think cross border that was a great point. But I do think that there are means to obfuscate transactions, and that's maybe what you're referencing. But the ledger is far more transparent than anything we see in the banking space. So these things can't be hidden from the public. Whereas I think a bank being attacked could certainly maybe paper over or hide this in some way. And actually, just being in the banking space, I've seen that. So there's all kinds of ransomware attacks happening all the time, and Bitcoin is requested by these attackers for a reason. Lastly, I'll say multi-sig is one way to approach it. The other way would be by adding a passphrase, and so this is just adding entropy or adding to the randomness of what was generated. And I think there's multiple ways to solve it, but I think David, your point is well taken from having multiple signatures on things, or if you're looking at it from two-factor authentication. Great point there. And then lastly, just wanted to highlight your point about AI. I think everybody's on notice. We will see more and more of these things as time goes on. People are using AI for all sorts of good things, but there's also people out there using them for bad. And so Bitcoin is not the only attack, right? There's basically every system is being pen tested by companies, and CoinKite was pen testing their systems with AI, and the AI they were using did not find this bug or this gap. And another AI came along from attackers and did find it. And now we sit here with this situation. So I think you did a great job of covering it. Just wanted to add a little color. Appreciate you having me up.
That was superb. Thank you, Bob. Really appreciate it. And folks in the audience, forgive me if my vocabulary on crypto and technology and all that is not always the most accurate. I am not a crypto native person, but nevertheless, I do my best. Carlo, over to you. Anas, please, please forgive me for not calling on you yesterday. And please, please, please do not leave. I will get to you immediately after Carlo. Go ahead, Carlo.
Good morning, David. Yeah, it's always the risk when you are talking about self-custody. The greater the responsibility, the greater the risk. The alternative, of course, is leaving it on exchanges where there's a whole other layer of risk. And when you see vulnerabilities like this, it is jarring and frightening, especially that you could wake up one morning having done nothing or interacted at all with that wallet and then see it just disappear. So that's definitely troubling. Some things that I'm looking at today. Number one, of course, crypto continues to stay choppy and sideways. It's funny that the stock market seems to be behaving more like crypto, and crypto seems to be behaving more like the stock market these days. But some interesting developments that I think we need to talk about today is number one, the Coinbase earnings call yesterday. I put out an article this morning on the Stablecoin Strategist that talks about it from the perspective of most people are looking at this as Coinbase missing its earnings, and it's not the first time. The stock is down pre-market trading because of that. However, I think the bigger takeaway is Coinbase is building a lot of ambitious things. They are definitely in direct competition with Hood as to who's going to be the big emerging winner in this game. But I think one of the bigger takeaways is not so much that they missed earnings, but that they are building and have a huge, very ambitious vision for stablecoins over USDC. And a big takeaway from the call is that they have confirmed that they are going to continue their rewards relationship with Circle. That agreement is going to renew, uh, despite the fact that there is this other stablecoin consortium that we've talked about, this OpenUSD. Circle still believes, or I should say, Coinbase still believes that Circle is going to be a key player for them, and USDC is going to be a key driver for them. And I think stablecoins are definitely where a lot of attention is being deployed right now. Also, I think Coinbase is pivoting away from simply being a fee driven exchange and going into more interesting products, stablecoins and agentic stablecoin payments being one of them. So it's curious to see how the market will respond to this. However, I think missing earnings is a small part of the story, an important part for shareholders, but the bigger part is what they're trying to ambitiously build. The verdict still remains out on whether they can do that. Another interesting development yesterday is there appears to be a revised compromise on the Clarity Act and the ethics provisions that has been floated to the White House. That is, I don't think it's been publicly released yet, but apparently there is another compromise in the works which gives state attorneys general more power over regulation of the crypto sector. Remains to be seen if that's going to get this done. I still maintain that this is not over yet by a long shot, and I still think that there is a decent chance of this getting passed because I think the Dems are going to face an existential crisis, that if they do not agree to clarity, they're going to face tremendous backlash from the crypto lobby. Elizabeth Warren has already started suggesting that, of course, taking the perspective that all the money going into crypto to quote buy, to suggest that they're buying senators, that to support their business interest is the height of irony when you consider how much banks have spent in lobbying Congress, but that's for another day. Another thing that was not on my bingo card was Scott Besson came out yesterday in support of the Clarity Act, and the Treasury Secretary of the United States, quoting Satoshi Nakamoto in a public post, was definitely something that was not on my bingo card for 2026, but just further confirms how joined crypto and stablecoins are to the future of the United States and how critically important it is that the US does not fumble this bag as the rest of the world pushes forward in digital asset innovation. So we're coming up. This is the end of the month. Next week is a critical week for the Clarity Act. If Trump doesn't pull the quote Trump card and force Congress to stay longer to get this done, then there is a really, really close, tight runway to get this over the line. And we may not have to talk about the Clarity Act much longer if that doesn't happen. Also, a reminder before I kick it back to you that all this debate about rate hikes and so forth, reminder that when Congress comes back from the August recess, they're going to be in full midterm primary campaign season. And if you think that this administration is going to let the economy run soft, let markets run soft, and not infuse liquidity on the eve of an election cycle, a critically important election cycle, I would urge you to take a look at history. There seems to be a correlation, not causation, but there seems to be a correlation between increased stimulation of money supply and election cycles. And what tends to win in those environments are risk assets. So keep your eye on that ball as well. Back to you, David.
Superb, Carlo, as always. Wishing you and everybody else a very good weekend. Anas, good morning. Really, I apologize greatly for missing you yesterday. You can have as much time as you'd like this
Good morning.
morning.
No, there is no problem at all. These things happen, and all of us are busy, and we cover too many things anyway. The You guys been talking about AI, and if you check what I put in the nest, it's really something I don't know how to label it. The State Department was making a presentation, and they have one slide talking about Africa, and somehow the guy who did that did it in AI, and they messed up the whole map completely. because everything was done in AI. So they have Nigeria in the middle of Africa, Mozambique on the other side of Africa, etc. And that is causing, I mean, it's really embarrassing. And people must know, because of fear of lawsuits and copyrights, you got to be extremely careful with AI, whether pictures, maps, especially maps. So don't ever take a map from AI. And the lesson today is very clear. And the issue here is when we talk about AI, and this is related to what's been happening in the oil market in recent days. We have some big accounts that talk about energy and oil, but those accounts basically are AI based, which means that the people who own them, they use AI a lot. And what happened is we have this attack on Jizan refinery, as you all know. And then later on, we have this attack on Bgig, which is in the eastern province of Saudi Arabia that came from Iraq, and that led to the US and Saudis basically bombing certain targets in Iraq. So some of those guys never heard of Gig before. So what they did is because they post from AI, they went to AI, but the incident is new, so it's not covered anywhere. So AI give them the information of what happened in Gig in 2019. And again, they have big followers, big numbers. So they literally covered 2019 incident all over again. And people are saying, "Wow, look what happened in Saudi Arabia." Anas, tell me why you are not worried about losing 5.5 million barrels a day. I said, this never happened. That happened in 2019. So whether you look at the State Department use of AI or you look at those guys' use of AI, the lesson is very clear. We got to be extremely careful. In the news, Trump announced that they reached a peace deal for Gaza. And if we take his statements about Iran and the Hormuz Strait, probably we will hear this so many times in the coming months. As you know, I'm being sarcastic here. I don't believe we are going to reach this deal. If you look at some of the details of it, and you know the area, you know this is not going to happen. Oil prices are up by 2%. Brent is around $89. Kuwait was attacked today again. ADNOC, that's Abu Dhabi National Oil Company, the UAE company, changed its pricing mechanism. Now it is more aligned with the market than before. And before they used to price their oil 2 months ahead. Now they realized with the backwardation that we have how much money they are losing, because you know that the prompt month basically is higher, so they changed that, and it is more aligned with the market right now. Another big news: we have fire at Al Ahdab oil field in Iraq. We don't know what the cause of the fire, as if all the problems we have in the oil market are not enough. And BP is selling everything they have in the North Sea. And at the same time, when BP announced this, Trump announced that he was promised by the new UK Prime Minister that he will open up the North Sea. We've been hearing this for a very long time. I wrote in 2022 that the UK North Sea is no longer investable. So this was known in the market, and the exit of BP is just natural. Another important news: the Saudi economic growth for the second quarter was negative. It's contracted by, listen to this, 4.8%. So a major decline. Despite this large 4.8% decline, Saudi Arabia fared relatively well in this crisis thanks to its diversification efforts in terms of diversification of income and the economy, and the ability, of course, to divert oil from east to west. But now we know what's happening in Bab el-Mandeb, so we don't know what's going to happen to economic growth in the third quarter. However, what we see here, and this is what's important to you guys, what we see here is only the tip of the iceberg. Other oil producing countries suffered more than Saudi Arabia, especially Iraq, Kuwait, and Qatar. And if you look at all those oil producers, Those are the major importers of almost everything, whether you are talking about China, Japan, or the United States or Europe, from agricultural products to industrial equipment, cars, planes, whatever, just call it. So those are major buyers, and now they don't have money. So you can see the ripple effect. These are only the results of the second quarter. So for this to ripple effect is going to show in the US and Europe and Asia. All those development projects, the mega projects in those countries, all of them are halted right now. And that important? Because they import all the metals needed, they need all the cement, they need, just think about, especially for those who work with such projects, you know exactly what materials needed, and all of that is disappearing from the global economy. And we have to remember that some of the world's major investments are made by the sovereign wealth funds of those countries, and now they have no money. So again, what we saw with minus 4.8 in Saudi Arabia, this is the tip of the iceberg for the world. And uh, with Saudis not able to export on their own tankers from Bab el Mandeb is, of course, is a big problem. Now, when we talk about Bab el Mandeb, Saudi oil is going through Bab el Mandeb, but on ships owned by other countries. But we did not see Saudi-owned ships. Now, it's been reported that there were two tankers that are Saudi-owned passed with their AIS basically off, and they are still off if this news is true, because they have to stay off for a very long time until they are in the Indian Ocean, away from everywhere. And again, this is the tip of the iceberg. Debt of those countries, all of those countries now are going to borrow money. So their debt basically is going to mushroom, increasing pressure, of course, on the global economy and the risk, etc. And here is another problem. Those countries, when you talk about Saudi Arabia and its allies in the Gulf, those are major donors, are some of the largest donors to poor nations. Now they have no money. So once you start talking about the ripple effect, you see where we are going. And all this thing we've been talking about months ago, if you remember, in January and February, we've been talking about all those contracts where American companies will go to Saudi Arabia and build all the AI and data centers and do all that stuff. No more. There is no money. And everything you see right now is leading to a major overhaul of free thinking in the whole region. Their plans, their options, just everything is changing. So I understand what my colleagues said today about AI, and some of those who are very optimistic about AI and all that stuff. But you got to consider these things that I mentioned, because the ripple effect, we have not seen the ripple effect yet in full. So we have not seen the full impact of the Hormuz crisis. And again, the large decline in Saudi economic growth is just the tip of the iceberg, and serves as a reminder of what's to come. Um, we have been talking about the three C's crisis for the last 10 days or so. Now, it's no longer the three C's crisis. It is the four C's crisis. And you all heard about this drone attack on Egypt's Damietta LNG terminal, where two ships, two regasification ships, both of them are American, were hit. And the issue is, who did that and why? What the idea? Of course, we can go through scenarios. And one of the ironies is that the communication minister basically went out and said, in a sense, oh, this is not the time to talk about who did it. We just need to focus on what happened. So there is no information. They don't know who did that. We've seen media trying to measure the distance between Iran and the Houthis and this stuff. All of this is nonsense. One of them basically was kamikaze attack. In a sense, the drone just kind of went into the ship and caused a fire. That was kind of the easy part of it, because for the drone to hit the ship is better than to bomb it. And some people are saying, well, this happened because there is no fuel for the drone to come back, which is the same issue with the kamikaze attacks in World War II, the Japanese attacks. We don't know whether there was a malfunction or not. We don't know at all. But since there are drones, it could be from anywhere, from anywhere. So there was an LNG tanker going from the United States to this area here to unload. Now it is going to Jordan because they cannot use the facility at this time. Kazakhstan's exports basically halted again by Ukrainian drones. And this is the third time this happened. So the question is, why Kazakhstan? What Ukraine has with Kazakhstan, and why is this happening? The problem we have right now is the following. We lost about 1.4 million barrels a day from Kazakhstan. Yet, the media and analysts were fixated on Saudi Arabia for the whole week on Jazan and Gig. We did not lose much from Saudi Arabia. The losses, the biggest losses came from Kazakhstan. So why everyone got fixated with Saudi Arabia where we did not lose the oil and we lost the oil on the other side and no one is paying attention to? And we are not losing 200 or 300,000 barrels. We are talking about 1.4 million barrels a day. What's going on? Was this just they overlooked it or someone is directing the media in the other direction? What the idea? In Saudi Arabia, we got all the news the day before that Riyadh was attacked and the airport was closed, etc. Most of that was fake news. The airport has 2 runways. One of them got closed. That led to a delay of 20 minutes of landing, and everyone went crazy over that. And then every single plane landed and the news died down. So what happened to all those videos for the big accounts showing the big explosions in Riyadh? They showed pictures and videos that been published 4 or 5 years ago. The issue that, or the other issues, today we are going to get the releases from the EIA about U.S. Oil production, and we will see the impact of the Hormuz crisis on shale. We are expecting another increase in production from shale as a result. We did post in the weekly report, which I really urge everyone to go to, because the first segment of it is there is no paywall, but it sums up all these ripple effect issues in a very nice way. The European Union invited companies to apply to build as many as 7 AI data centers in Europe, backed by public funds. Here's the problem. There is not enough energy. They don't have any, extra energy supplies for them. So how they are going to end up with the energy supply? They are already short without them. Goldman has been talking about the diesel crunch. You guys heard about the diesel crunch since February, and then we emphasized that in March. So you guys were way ahead of even Goldman. U.S. refiner Valero posts the highest quarterly profit since a Russian invasion of Ukraine. Shell profits more than doubled. Exxon did well but missed. Canada Imperial Oil second quarter profit more than doubled. Here's the problem. Oil company profits basically is huge right now because of what happened, but we have a public backlash against it because they call them like the war profiteers, and this is not going to bode well with Trump. Trump is going to go after them because gasoline prices did not decline. So they will have a public backlash and Trump backlash. The only way Trump basically can solve this issue is by focusing on gasoline exports instead of just talking about profit. So if he's serious, he can tell them the following. Say, look, lower exports or I will impose a ban. And that's it. These are some of the issues today. The final point I would like to mention is we are in a perfect storm right now when it comes to energy. We have 15, as of today, we have 15 bullish factors. Each one is large enough to push prices up. But the fact that prices are not up, I know people are talking about manipulation. You cannot continue manipulation for a long time. So we have a major hit to global demand, and that's part of the reason why we don't see very high prices. Back to you.
Just honest, real quick, because I think it goes along with just what you were saying here with energy, is that in news, Westinghouse, which is a U.S. based, actually a Pennsylvania based here, nuclear company, just filed for their confidential S1, which I think is, just goes along with the story of energy and everything that we've been talking about here. So that's going to be one. It's confidential filing, so we won't see the numbers or anything, the amount of shares yet. But I think it's an important an important story for us to keep an eye on here. I think energy obviously is it's going to be the factor going forward, as with energy, with AI, with gas prices, with everything else going on. It's obviously the one of the biggest stories that we need to all pay attention to.
I'm glad you mentioned this because there was a piece of information, probably the most piece of information today, that everyone should be aware of. As you know, the United States, through LNG, was able to kick Russia out of Europe, and the US went from zero exports to Europe to 30%. So 30% of the EU imports of gas come from the United States. It was zero before. Russia went down from 55% to 14%. Now, take the same concept, and the US is doing it in Asia. So now Qatar, who cannot export LNG, but they have those contracts with Asian countries, Qatar is buying US LNG to satisfy the demand of their customers in Asia. And that will give the United States the full control of the global LNG. Now ask yourself who closed the Hormuz Strait. Back to you.
Superb on us. Thank you very much. Folks, great show today. Very enjoyable way to end the week. Absolutely banger panel. And Bob, thanks for jumping up. And the other gentleman that was a new speaker. Great to have those voices. I will wish you all a very good weekend. Please, folks, follow our speakers that are up on stage. You witness for yourself how valuable they are every day. To everybody in the audience, thank you for joining us. We'll be back here on Monday morning at 8 a.m. We will see you then. Take care and have a good day.